Friends, we have been discussing rural finance, and today is the time for us to discuss the institutional sources of rural finance. In the last discussion that we had, we talked about the non-institutional sources and the problems associated with these non-institutional sources, and how the government has come up with various provisions to prevent the exploitation of our farming community and people in the rural areas from exploitation by these non-institutional sources. One more way in which this kind of exploitation can be prevented and stopped altogether is by encouraging the institutional sources. So this is another of the initiative by the government. They are encouraging the institutional sources. They are coming up. They are encouraging the setting up of more and more institutional sources, and also ensuring access of the rural community to these institutional sources, so that the exploitation of the poor in our rural hinterland does not take place. So today we'll be discussing some of these institutional sources of credit for the rural community. You would remember that we had a brief overview of the institutional sources that we'll be discussing. So we'll be discussing Nabard, and then there is a consultancy service which is operated by Nabard that is going to be discussed, and then we'll be discussing the banking network. This would be the agenda for the day, wherein we'll be discussing the commercial banks, regional rural banks, cooperative and cooperative land development banks, and the lead bank scheme as well. Then there are other ways in which the access to credit is ensured for the people living in our rural areas. So we'll be discussing those initiatives also, which includes the farmer service societies, the non-banking financial companies, the agriculture insurance, which is again linked to the credit, because insurance provides credit to the farmers when somehow the crop fails. So insurance will be paid to them in case their crop fails, which can be then used for purpose of investment in the next cropping cycle. So in that sense, insurance is basically linked to credit, or at least fulfillment of the credit requirements of the farmer. So we'll be discussing the agriculture insurance and the Fasal Bima Yojana, and then we'll be talking about the different financial models which are there, which includes the agri-export zones, the self-help groups, and the KCC. Now let us move on to a more detailed discussion on Nabard. As you can see here, Nabard is the National Bank for Agriculture and Rural Development. This was basically set up in the year 1982. This is the apex, topmost organization of agriculture and rural development finance. So basically it provides finance not only for the development of agriculture but also for the development of rural areas. So the scope is not limited to agriculture, but all other activities in the rural areas which ultimately contribute to the development of the rural areas. So this is the apex organization. Please understand that it supervises the RRBs and the cooperative banks. RRB basically stand for the regional rural bank. In Uttarakhand we have the Uttarakhand Gramin Bank, which is a regional rural bank, the Kshetri Gramin banks. So it basically supervises the RRBs and the cooperative banks in a particular area, in a particular state. Please understand, supervision is not regulation. As far as the regulation is concerned, it is still taken care of by the RBI, which is the regulator for the banking industry. But supervision is provided by the Nabard. Okay, now please understand that it provides long-term refinancing to entities engaged in rural financing. Now please understand the very important term which has been used here is basically refinancing. What do we mean by refinancing? Refinancing means that it is not going to provide loans to the actual borrowers. It only provides loans. So in that sense, it is not involved in retail banking as such. It only provides loans to those entities which then further lend to borrowers. So it is not going to provide loan to maybe a farmer, but it would provide loan to a regional rural bank, which then would further lend to the farmer. So that is why we are saying that it is a refinancer. It's not a financing entity, it is a refinancer. So the meaning is clear. It provides long-term refinancing to entities engaged in rural financing. So there are different entities which are engaged in rural financing, which provide credit to people in the rural areas, the rural community. Which these kind of rural financing entities are the commercial banks and the regional rural banks, the state cooperative banks, and the other financial institutions. So all these institutions which are actually involved in retail loans, providing retail loans to the end customers, to the farmers or to the small businesses, they are provided funds by Nabard, because they would also require some funds so that they can give away loans. So those funds are provided by Nabard as a loan to them as well. So basically Nabard is going to provide loans to these entities, and then these entities are going to onward lend to the actual borrowers in the rural areas. So this is how Nabard operates. So please remember this, and that is why you do not find any branches of Nabard in a district or maybe in a town or a district headquarter. Why? Because they are not engaged in actually lending to the retail customers, farmers, small businesses. They are not, that is not part of their job. So that is why they don't need to have retail presence in every single town or village. They are present only in a few places because of this, because the task for them is to provide financing to these kind of institutions. And that is why, while commercial banks and RRBs can be found in a particular town, it could be found in a small town, or maybe in a larger village, bigger village also. State cooperative banks can also be found in small towns. Likewise is the case for other financial institutions, but that is not the case with RRB, because the job for RRB is to provide lending to lend to these institutions, right? Please remember this. Now, what kind of loans, what kind of credit is provided by Nabard? Nabard provides credit under two heads. One is the production credit, that is basically meant for cultivation of crops. Now this financing would be provided to the financing agencies which have been mentioned here, and then they would further provide this kind of financing to the farmers for purpose of cultivation. So that kind of credit is called the production credit. The other kind of credit is the investment credit, which is basically creation of long-term assets. So the credit which is provided for creation of long-term assets, which includes assets like tanks, like wells, and for purchase of machines. So if these kind of credit are required, this kind of financing is required, that also is provided by the Nabard. So these are the two heads under which Nabard provides financing to the other financing entities, financing institutions, and other financial institutions. Again, not only does it provide these kind of advances, these kind of loans or financing, but it also monitors how the funds provided by it are being utilized by the client entities. So for example, if it has provided some kind of financing to, let's say, a state cooperative bank, it would also see how these state cooperative banks are utilizing that funding. Are they utilizing that funding for the purpose for which they had actually requested that fund, or are there chances of some kind of a misuse? So all these things are monitored by Nabard as well. Not only this, it also provides training and assistance to entities engaged in rural development activities. So it also provides this kind of assistance to the entities which are engaged in rural development activities. Now Nabard has come up with a subsidiary which is called the Nabard Consultancy Service, in short NAPCONS, and basically this is a wholly owned subsidiary of Nabard, and as the name suggests, it is meant for the purpose of providing consultancy. So it provides consultancy services too. So these are the targeted segments or targeted beneficiaries to whom NAPCONS provides the consultancy. It could be the governments, it could be the state government, central government, and there have been instances where NAPCONS has also provided consultancy to foreign governments also, or to state governments in some other countries as well. Apart from that, they provide consultancy services to banks, to various industries which are operating in the rural areas, then the NGOs which are working at the grassroots levels in the rural areas, and then the upcoming businessmen, entrepreneurs who have set up their enterprise in these kind of areas. So they provide consultancy to all these. And what is the scope of these consultancy services? See, these consultancy services, they extend to the issues related to agriculture, to rural development, and some related areas. So basically the scope, again, as is the mandate given to Nabard. We had discussed that Nabard is basically for agriculture and rural development, so the scope extends to these two areas and some related areas connected to agriculture and rural development. Now, what kind of consultancy services do they provide? They may do a techno-economic feasibility study. What do we mean by this? Techno-economic feasibility study means whether a particular project that is being planned, is it feasible? Is it doable? Is it going to be viable? Can it be of some use? From the technical point of view and from the economic point of view, can we actually do that project? Can we actually ensure that the project is successfully completed technically, which means do we have the technical resources to complete the project, and do we have the finances to complete the project on time? So these kind of studies, which generally take place before a project is implemented, these kind of studies are conducted by NAPCONs, and you would probably be discussing these techno-economic feasibility analysis in project management also. Again, project formulation, the whole design of the project, and then once the project has been designed, to implement the project. So it may so happen that a particular government wants to do a particular project in a particular state. So now it is for the NAPCONs to provide consultancy on the design of the project, how to design the project and how to basically implement it. The project could be increasing financial literacy among rural people. So how to design that project, how to actually implement it, these kind of consultancy services are provided by NAPCONs. Please understand, NAPCONs is not going to actually implement the project, it is only providing consultancy. So it is helping out the government or whosoever is the client agency to design the project and then to implement it. Then monitoring and evaluation of developed projects. So such projects are also monitored and evaluated, whether they have been successful or not, whether they have been able to achieve their objectives or not. So these kind of evaluations are made by NAPCONs, and they can also monitor how well the particular project is working or how well it has been implemented. So these kind of services are provided by NAPCONs. Then micro developmental planning at a very, very small level, micro level. So development program for maybe a particular village, or maybe a cluster of houses in a particular village. So these kind of micro developmental level planning, that is again a job of NAPCONs, and in case these agencies want NAPCONs to do it for them, NAPCONs provide this service as well. Then they also build capacity. Building basically means training the human resources so that they can operate on their own. So this is what we mean by basically capacity building. So they also provide these kind of trainings to people in the rural areas, to the banks, the personnel in the banks and the various industries, or the people in the NGOs. So they provide these kind of services. So this is basically connected to the training part. And then turn around strategies for banks which are operating in the rural areas. So how can they be more profitable? Turnaround means basically transforming from a loss-making enterprise to a profit-making one. So how can banks who are not able to perform well, who are not able to earn profit in the rural areas, how can they turn themselves around? How can they start being profitable? So these kind of consultancy services are provided by NAPCONs. Now let us talk about the other financial entities which are which are serving the rural areas. These includes the bank, the commercial banks, which include both the public and the private banks. However, the dominant share is held by the public sector banks, and these banks provide crop loans, they provide marketing loans. Marketing loans would help the farmers to market their products in the market. This might probably require the packaging and the transportation and to an extent some kind of a promotion or branding also. So in case the farmer requires some credit to invest in these kind of endeavors, then the banks would provide them loan. Then again, farm mechanization loans for purchase of farm machinery. Then again, we have got regional rural banks. Now the regional rural banks are different from the commercial banks. Commercial banks might be operating in the whole of the country. They might be having branches in many parts of the country, while regional rural banks are, their scopes extends to a particular region, and that is why the term regional. So they are basically regional rural banks. Basically they operate in a particular region. For example, earlier in Uttarakhand there were basically 3 regional rural banks. In fact there were 4. So one was operating in the Pithoragarh area and the Champawat district, and then which was called the Pithoragarh Kshetri Gramin Bank. The other 2 were operating in the different parts of Garhwal, and one was operating in the Haldwani and the Nainital and the Almora district. So then what happened actually, then the 2 regional banks which were operating in the different parts of Garhwal, plus the Pithoragarh Kshetri Gramin Bank which was operating in Pithoragarh and Champawat, they were merged to form Uttaranchal Gramin Bank. And then some years back, this Uttaranchal Gramin Bank, there was a merger between the Uttaranchal Gramin Bank and the Almora Nainital Gramin Bank, and now the entity which is formed is known as the Uttarakhand Gramin Bank, which is serving the whole state. So what I'm trying to tell you, that the scope of the regional rural bank, at most it extends to the whole state. It does not go beyond that. There are regional rural banks which are only catering to a particular part of the state. There are such regional rural banks in UP. They are only catering to a particular area within the Uttar Pradesh state. So regional rural banks, their scope is very, very narrow in that sense. And again, the need for them was felt because it was found out that the commercial banks were not able to provide access to credit to the remote villages of the country. So it was felt that we should have a different kind of banks which will specifically be catering to the rural areas, and that is why the name regional rural banks. However, they are sponsored by commercial banks, and the commercial banks also own some shares. They in fact contribute share capital to the regional rural banks. So as I said, part owned by central and state governments. 50% ownership is with the central government, and this is the structure for almost all of the regional banks in India, and 15% is with the state government. The remaining 35% is with the sponsor bank. I'll give an example of a sponsor bank. If you talk about the Uttarakhand Gramin Bank, you will find that the sponsor bank is the SBI. So 35% of the shares would be held by the SBI, and that is why you might find people from SBI being sent in deputation to the Uttarakhand Gramin Bank in senior level positions. Then regional rural banks, as I said, they serve the remote rural areas which are not accessed by the commercial banks. They provide credit and channelized savings. So they don't only provide credit, but they also present a platform to the rural community to save. So, and they are also acting as an avenue for saving by the rural community. So they help channelize the rural savings. The approach that the regional rural banks they adopt is called the service area approach, which means that a particular branch would be assigned a particular number of villages, and the job of the branch would be catered to these villages and to specifically take care of the credit requirements in these villages. This is called the service area approach. So the service area would consist of all the villages that have been assigned to a particular branch. Now the branch should be responsible to providing credit solutions, financing solutions to the community in those particular areas, in those particular villages. So this is called the service area approach. Now let us have a look at the cooperative banks, which are other slightly different category of entities involved in providing access to credit to rural community. So cooperative banks generally provide short to medium term loans. The amount generally is around 20 lakhs. There is, of course, there are some exceptions, but the maximum amount that can be loaned by and large is rupees 20 lakh, and the tenure is 5 to 7 years. That is why I said that they are generally providing loans of short and medium term. The tenure is short to medium term, and the tenure cannot extend beyond 7 years. Then what kind of activities do they finance? They finance the agriculture and allied activities. I hope now you understand what allied activities are: beekeeping, fishery, poultry. So anything which is connected to agriculture, maybe horticulture, growing of medicinal plants, these are all allied activities. So they provide these kind of solutions also. And now this is important from the rural marketing perspective, because as we have discussed, in rural markets most of the people are still engaged in primary activities like this, and they are being provided credit by the cooperative banks. Then it's not that the cooperative banks are only catering to the rural areas, they are also catering to semi-urban, urban areas, and that is why they also provide education loans and housing loans. So these two kinds of loans, and apart from that they also provide loans to small businesses. The working capital requirement the small businesses might be having, and that kind of working capital requirement is also satisfied by the cooperative banks through the cash credit kind of accounts, CC accounts. So these are the solutions, these are the purposes which are solved by cooperative banks when they provide financing. Now let's have a look at the way in which the cooperative banks operate. We need to understand that the rural credit specifically, which is important for us because we are studying rural marketing, is provided through the PACs. Now we'll have a look at what PACs is and how basically cooperative banks provide loans, provide credit at the village level. So PACs are basically primary agriculture credit societies. We'll have a look at the cooperative banks and the structure, and then we'll understand what is the role of PACs there. Now this is the structure. You can have a look here. We have got primary agriculture credit societies. Then we have got the district or the central cooperative banks, and then we have the state cooperative banks. Now please understand one thing: this district or central cooperative bank, these are one and the same thing. Don't think that this has some relation to maybe something in Delhi. No, it's not like that. Basically we are talking of and it's also not connected to the central government. We are basically saying that the district cooperative banks can also be at times called the central cooperative banks, and then we have the state cooperative banks at the top. Now state cooperative banks and the district or the central cooperative banks, the PACs are the members. I told you, primary agriculture credit societies. Now what are PACs basically? PACs are basically groups formed by cultivators and artisans. So these cultivators and artisans in a particular village, they come together and form PACs, or the primary agriculture credit societies. And what do they do in these PACs? So the people would come together, they would contribute some money, and they might contribute their saving to the group, and the saving that they contribute might be used for the purpose of providing loan to any of the member who requires loan. So let's say there are 15-20 members in a particular primary agriculture credit society, and all of them are contributing, let's say, 100 rupees every week. So in a week the PACs would have 2000 rupees, 100 into 20, 2000 rupees, and now this money can be used for providing loan or advances in case any of the member in the PACs require that assistance. So this is how the PACs operate. So basically PACs are the smallest credit institution. So they are the most elementary credit institution. They are available at the village and panchayat level, and not only do they channelize the savings of their members, not only do they take contributions from their members, but they are also provided credit by the cooperative banks. And then this credit that they've been provided by the cooperative banks, they can further provide onward credit to their members. So is that making sense? So basically PACs, they are provided loans, they are provided credit by the cooperative banks, and then this amount is then further lent to the members of the primary agricultural credit societies, PACs, on need basis. So if a particular member requires some money, maybe because he is purchasing a cow, or maybe he is planning to construct a well for purpose of irrigation, then the PACs of which he is a member would provide him loan. As far as the credit requirements of PACs are concerned, they are being provided financing by the cooperative banks. So this is how the whole thing operates. Now, what is the rationale? I mean, you could be asking this question: what is the rationale behind having PACs? Because the bank can directly lend to some individual farmer also, or individual borrower also. See, the rationale is that when people come together in a group, there is a social pressure also, which means that the individual members who are part of the group, number one, there would be a social pressure on them from the other members of the group to repay the loan amount. So there would be some kind of a social pressure, and that is why the probability of repayment would be higher. The probability of defaults would be much lower. This is number one. Second, in India, and I think I've discussed it earlier also, in India people tend to be less risk taking. Our personality is, we are risk averse, but when people form a group, they tend to take greater risks, which means that people in India who are generally risk averse, when they form a group, they tend to become moderate risk takers, and moderate risk taking is very likely to result in entrepreneurial success, is very likely to encourage the members to set up their own businesses because they feel more confident about their ability to run a successful business enterprise. So that is the other objective behind setting up these kind of PACs. People should come together, they should become more they should take higher risks, and which might ultimately lead them to start or set up their own business, and ultimately they may run that business in a very profitable manner. So that is the whole objective behind having these kind of PACs. Now we are going to talk about the cooperative land development banks. What are these land development banks? You talked about the short term we had a discussion about the medium term loans and the short term loans which are provided by the cooperative banks. But then what about the long term loans? These are provided by the cooperative land development banks. Now they are providing long term loans. The amount up to 50% of the land value which has been furnished as a security, which has been presented as a security, up to 50% of the value of the land, or 30 times the revenue from the land. This much amount can be loaned. The tenure can be as long as 20 to 30 years. So as I said, cooperative land developments are basically meant for long-term financing requirements, are basically meant to provide long-term credit to the borrowers. Interest rate would be somewhere in the range of 11 to 12%. Now what is the objective behind having cooperative land development banks? Funding agriculture projects which are again time consuming, which are going to take a lot of time to materialize. So these kind of agriculture projects are there, and people require credit, people require financing for these kind of agricultural projects, and this is provided by the cooperative land development banks. Then increasing agriculture production, development of land, as well as business. Now they are not only meant to provide loans to the rural farming community, they are also providing loans to the businesses, but again these loans are going to be of longer tenure. So what are the functions of the cooperative land development banks? They accept deposits, so they would accept deposits from whosoever wants to save, and then they offer basic investment projects. I think there's a mistake here, so I am going to correct that mistake. They basically are offering basic investment products also, not projects. So they are offering basic investment products. What do we mean by this? You might have heard a lot about these kind of basic investment products. The example could be a fixed deposit or an RD, recurring deposit. Don't you think they are investment products? If you want to invest your money, you can invest in these kind of instruments. So that is what we mean by offer basic investment products. So if you want to deposit your money, if you want to save your money, and in fact so they allow you to start a saving banks account, but in case you want to invest that money, they would allow you to invest in instruments like a fixed deposit or a recurring deposit, so that you can earn a higher rate of interest. And apart from that, they would be providing loans. For that they do an evaluation of the property, and then accordingly, depending on the worth of the property, the loans would be advanced to the borrowers. Now this is the structure of the cooperative land development banks. We have got the central land development banks, which is at the state level, and then we have got the primary land development banks, which is at the district level. And as far as the central land development bank is concerned, they are provided grants from governments, and many times SBI also provide grants, so state government could provide grant. So that is one way in which they collect their funds, and apart from that they are funded by share capital, and they also float debentures. I hope you know what debentures are, debt instruments. So they float it in the market. Those who want to buy those debentures, they buy those debentures, and the money thus earned would be used by the land development banks for lending purpose and for providing other banking services. Likewise, as far as the primary land development banks are concerned, they receive grants from the government. They are again funded by share capital, similar to the case here in central land development banks. But then they can also borrow from the central land development banks at the state level and the other financial agencies. And then again there are members who basically form these kind of cooperative enterprise. They also contribute the membership fee, which again becomes a source of funds for them. So the deposits they are getting from the members as membership fee, and non-members, if these non-members are saving their money with the primary land development bank, so the money would be used as funds for purpose of lending and providing banking services to the borrowers. So this is how these two entities are connected, and this is how they collect their funds, they arrange their funds. Now that we have discussed the cooperative land development bank and we have discussed the cooperative banks, you should be mindful of the difference between the two. Long-term loans, land development banks. Short-term loans, or of maybe 7 to 8 years of tenure, they are provided by the cooperative bank. So this is the main difference between the two. As far as if somebody asks you working capital requirement, the land development bank is not going to help you to assist you in this particular case. Working capital requirements would be fulfilled by the cooperative banks, right? Now let us talk about the lead bank scheme. You must have heard of lead banks. So what basically are lead banks? This is something that we need to understand. Now lead banks, they can be public or private sector banks which have been tasked with playing the leadership role in a particular district. So they are going to lead the banking effort in a particular district. They can be banks from the public sector, they can be private sector banks as well. Now the designation is given to the bank with greatest reach and resources in a particular district. So in a particular district, the bank which has the greatest resources technical resources, human resources, or which has the greatest reach, that particular bank would be assigned, that particular bank would be designated as the lead bank for that particular district. So in different districts we can have different lead banks. So basically lead bank is only leading the banking effort. So there are different banks which are present in a particular district. So we are choosing the one which has the greatest reach as the leader, and that is why the term lead bank. What functions do the lead bank play? What roles do the lead banks play? What functions are performed by them? First of all, since they have been designated as the leader, they have been given the leadership role, they have to ensure coordination among commercial, cooperative banks and financial institutions. So they coordinate the efforts of the commercial, cooperative banks and financial institutions. They ensure credit flows in rural and semi-urban areas. So they ensure that no particular area, be it rural or be it semi-urban, remains out of the reach of the banking network. So they ensure credit flow to agriculture, not only agriculture but small scale industries, other priority sector activities. We have discussed what priority sector activities are, which includes the education and housing apart from agriculture and allied activities. So they ensure that these sectors, the education loan and the housing loan, are easily available to the people in the area in which they are functioning. And then microcredit. Microcredit is less than rupees 50,000. So many enterprises require microcredit. There are street hawkers, mobile traders, they require this kind of credit. So basically they ensure that the credit flow is maintained to these different target beneficiary segments. So these different target segments are able to access credit as per the requirement. This has to be ensured by the lead bank. And how do they do this? They assess the credit gap. The lead banks basically assess the credit gaps. Credit gaps means what is the requirement of credit in a particular area and what all agencies are there to satisfy those credit requirements, and how much of that requirement can be fulfilled by those agencies. In case there is a gap, the demand is more than the supply, then naturally it is for the lead bank to further increase the supply, to maybe ask more number of bank branches to be opened in that particular area so that the credit requirements of that particular area can be satisfied. So this is the meaning of assessing the credit gap and allocating the credit requirements among credit agencies. So when they find that there is a credit gap in a particular area, they assign this task to the different credit agencies, the commercial banks, the other cooperative banks, the financial institutions, and then they decide which of these are going to cater to the area where there is a credit gap. So this is what the lead banks do, and then they direct these institutions to plug up this credit gap. Is this fine? So this is basically the job of the lead banks. So basically they coordinate the effort of all the commercial banks. They ensure that, for example, if there are some unbanked areas in a particular area, then it is for the lead banks to decide how those unbanked areas would be brought under the banking network. How many branches will have to be opened there? Which all institutions, which all banks, which all commercial banks, which all financial institutions have to set up their branches there. So this kind of coordination is performed by, this kind of coordination effort is made by the lead bank. So they will coordinate in such a manner that the credit requirements of all the regions, all the areas in a particular district are fulfilled. And there is no duplication of effort, which means, let's say in a particular region there are 5 bank branches of different banks have opened up their branches there, and then there is another region which is unbanked because there is no branch. So they would not let this happen. So this kind of coordination is basically made by the lead banks. Okay then, in this particular session we'll restrict our discussion to this only. This has been a very technical discussion, and in the next session we'll be moving to discussing some other ways in which the rural communities are provided access to finance they are provided access to credit.